world is going to be differentiated between those who hold assets and those who don't.
Having fixed deposits and having digitized assets, going into high-end volatile asset classes. In our fund management parlance, we call it the barbell strategy.
FD is essentially a way of parking your cash. It's not an investment. You shouldn't really count it as an investment.
Yeah.
Geographic diversification basically helps you protect against currency. Even though our wealth might be growing in India, it eats into our ability to spend abroad.
Only when you are expending in another currency which is not your currency, then this purchasing power is hitting, okay?
Tell me, how can I invest in the global equity market? The rupee losing 4.5% on average against the dollar for the last 34 odd years. Is this a structural flaw in our economy?
Every good that you import, crude oil, gold, electronics, toys, all of that is imported in dollar terms. So the more you are demanding that currency which you do not control, automatically your home currency has to get weaker. That is a natural progression for our country's currency going forward.
The houses that we grew up in, it used to be 3x of your salary. It was affordable. Today, the same house is 10x of your salary. So the average Gen Z person feels that it's out of reach. What's your advice on investing for someone like that?
You can trade, you can be disciplined, you can make those quick bucks, but compounding is a boring process.
Having said that, Bitcoin has been the fastest growing asset in the last 15-16 years. Nobody talks about it. At all these wealth conferences,
There's also a strategy which I also personally kind of look at is getting exposure to it through companies that are working in the space. The likes of
in 20 years, do you see the gap between the rich and the poor getting wider or narrower? Lakshmi, Viram, welcome to the Plush podcast. Great to have you here. And this topic today, I think, is very relevant. All of us are running fast, yet we feel we're standing still. And building wealth is something I think every one of us across all stratas of society want to do. And who better than the two of you to shed light on this wonderful subject? If you could just start off by introducing yourselves. For those who are living under a rock outside the financial ecosystem, that'll be great.
So hi, I'm Lakshmi Iyer. I am the Group President Investments at Bajaj Finserv and also the MD of Bajaj Alternates. And that's what I do for a living, eat, drink and refinance. Sometimes food, sometimes fitness.
Excellent. Thanks, Rahul, for having me here. And I'm Viram Shah, the founder and CEO at Vested. We are a platform that allows Indians living in India and globally to access global assets, something that they did not have access to over the past decade or so. And that's what we wanted to solve today. Now more than 15,000 crore that people have invested through us. And yeah, combination of finance and tech for me.
Awesome. Fantastic. So let's get going. Before we talk about portfolios and allocation, I want to share some data that I came across. 100 rupees in 1979. 40 years later, by 2019, the purchasing power had fallen to rupees 4.75. So 4 rupees and 75 paise. And that's just because inflation ran at 6% a year and eroded 95% of its value. So let's start on the premise that just keeping your money in a savings account isn't really going to cut it, right?
For sure. I mean, it is a given in today's world that you have to make your money work for you while you're not working, right? And that's the way to financial freedom. And I think that's what everybody is chasing. So putting it in some or the other investment class, ideally well diversified, is very, very important.
Have you seen the movie Diwar?
Yes.
Dialogue याद है मेरे पास गाड़ी है बंगला है प्रॉपर्टी है बैंक बैलेंस है ये कार है all of that, right?
Of course.
Now how do you get all that? Just by saving money or keeping money under your mattress. If Vijay would have done that in the movie Diwar, do you think he would have earned that? Answer is no.
Yeah.
So therefore, it is very critical to be able to get those bragging rights. I have this and this and this, and I've grown it from here to here. Investment zaruri hai. It's very, very important. So I think merely letting your money sleep
Yeah.
or hibernate
Yeah.
or be like Kumkaran is equal to savings.
Okay.
But letting it grow,
Yeah.
becoming that Goliath
Yeah.
is something what investments lets you do.
Right. So we can all agree that investment is super important. But the problem that a lot of people struggle with is, where do I put my money? Yeah. Broadly speaking, what should a portfolio look like in 2026? The average person in their 30s and 40s, assuming they're working, people like us, they have a job, uh, they probably have a bank FD. Someone sold them a mutual fund. They may or may not have a house, or they could be paying an EMI. And, they have an EMI on their car and stuff as well. And there's no coherent strategy. So let's start with the different kinds of asset classes real quick. We don't have to get into detail with each. But which are the different asset classes that are out there?
So, you start with, you said bank fixed deposits. So, there is a fixed income asset class, which is very plain, simple, vanilla. Of course, you have equities. I'm talking about the financial asset classes first, which is like the strong, I'm having coffee. So, it's like a caffeine into your portfolio. And fixed income is more like water. Then you have real assets, which is real estate. You have precious metals, which is gold. Now it's even silver. So these kind of broadly cover your traditional mode of investment asset classes. And this is where you see bulk of India investing.
Yeah.
Within equities, we can say domestic equities, foreign equity, all of that is an offshoot. Then you have alternates. When you say alternates, it's not alternate investment as a vehicle, but as a medium, so which is non-correlated. So which is what is non-correlated? Something like investments in art, investment in anything which is not the traditional fixed income mode of investments tend to be an alternate investment. That's also picking up in India. In the rest of the world, it's much more pronounced. So I think these are broadly, and your favorite asset class, crypto, for example,
Yeah.
or tokenized or digital assets. That's another upcoming stream, which is really appealing to largely, I would say, the cohort that you mentioned, and specifically Gen Z and probably the millennials. So I think that's the large, broad ecosystem under which investments are possible. And to the point that you mentioned earlier, Rahul, there cannot be a cookie cutter approach. And that is probably the reason why it is not able to synthesize and give you a global benchmark saying that what's good for you is necessarily good for me or is the best for me.
Right. Now, even within mutual funds, you've got liquid funds, hybrid funds, growth funds. So quickly just walk us through those as well. And how are those different from each other?
I mean, I think Lakshmi would be better sort of equipped. I am more on the global side, but from what I do, my personal investments essentially
Yeah.
is there is a two vectors where you can sort of diversify within mutual funds, right? One
Yeah.
is the different market caps. So how
Mhm.
big is the company? And then you have all these flexi cap funds. So you have small cap, big cap, large cap.
Mm-hmm.
And then you have different sector based that you can pick, right? So if you want banking as a sector or you want IT services as a sector, you can take a particular bet on a sector.
Yeah.
So those are two. And then overall holding the entire market, right? I think that's something that's become very popular in the US, where just the index S&P 500, NASDAQ 100 has trillions of dollars in their funds or ETFs as well.
One of the deepest
Yeah.
capital markets.
Correct, exactly. And here also in India, I think the indexes are also now picking up. Like you have Nifty 50, which is quite a good way to own a bunch of different companies that are top companies in the country.
Right.
So that's an index approach that one can take as well. And then liquid funds is just, there are, I think, a whole host of where do you park your cash, right? And
Right.
a lot of people feel like FD मैंने invest कर लिया. FD is essentially a way of parking your cash. It's not an investment. You shouldn't really count it as an investment.
Yeah.
Similarly, just keeping cash idle or parking it in a liquid fund, right? These
Yeah.
are three ways in which you keep money for a rainy day, and you shouldn't have more than a certain amount in all of these buckets. And then, like Lakshmi said, the caffeine, right? You want equity exposure, you want real world exposure. That's your other aspect.
Right. I have a view on FDs. Most investors are not financially sophisticated, right? So they like the idea of fixed income. Is a liquid fund also is your capital safe in a liquid fund? A, so capital preservation. And B, what sort of returns do your liquid funds give you or debt funds give you? B, because an FD is giving you perhaps post-tax. I know it's not tax efficient, but it's giving you about 5% today post-tax, right? So if you had to put your money in, park your money for some fixed income, would you put your money in a liquid fund or would you put your money in an FD?
So I'll say, Rahul, there is no assurance of life. There's no guarantee for our life, and that's the reason we take life insurance.
Yeah.
So likewise, when you invest via a mutual fund, say in a liquid fund, there is no guarantee of returns. The only guarantee you get is when you do in fixed deposit, and that is a reason your upside is also capped.
Right.
So I'd say market linked returns is a better way of putting when you are investing in mutual funds. And as I said, there is no guarantee of returns because there is a liquidity risk, there is a credit risk, and there's a market risk
Yeah.
that you are undertaking in any investment,
Yeah.
and liquid fund is no exception. But because these investments are for very short term, like 15 days, 3 weeks, like a month or so, the intensity of volatility that you're subject to in the market is very limited.
Mm-hmm.
It's like me driving a car, okay?
Yeah.
If I'm driving from Mumbai to Pune,
Yeah.
the number of speed bumps that I get would be significantly higher than when I'm traveling from BKC to probably my house, which is the other side of BKC, for example.
Right.
So I think that journey reduces the volatility and therefore my intensity.
Yeah.
So I'd say that there is the risk involved and therefore you get market linked returns. And hence, while your downside could be minimal, your upside is also open. So I'd say you have to ride along the journey and depending on your risk appetite, be there.
Yeah.
But it allows you a chance, and because in the market there is always a constant movement of interest rates, they are going up, they are going down, you have a chance to participate in that.
Sure.
And very few people are aware of this mode of investment, of parking their surplus capital, and there is a magnetic pull
Yeah.
towards a bank FD.
Sure.
Because a child in the womb has a bank account.
Yeah.
But even after the child is born and starts walking, he or she doesn't have a mutual fund folio or a demat account.
Right. What I'm going to say, a lot of finance people don't like. So when you're constructing a portfolio, for example, right, I would argue that there's room for an FD because assuming you're taking fixed returns, whether monthly or quarterly, because that stable income, assuming it's of a decent size, allows you to go further out on the risk curve and take chances on digital assets, on global equities, and some of these, emerging tech assets. So arguably riskier bets with far greater upside. But I know that, I'm not going to lose my house over it.
Yeah.
Because I have that layer of security with an FD and safety. So I can sleep peacefully at night. And who can put a price on that versus putting all my money in equity and being super stressed when there's a black swan event. A black swan event is something like a COVID or, the global financial crisis that happened in 2007 to 2008. So perhaps there's a role for an FD there. But of course, the banking guys and of course, these guys, the investment guys, they don't quite like that advice because they're trying to sell a product as well.
There's definitely a role. I think one just needs to be clear ki what role is it playing? You can't be thinking that I put that money here and it's going to grow a lot.
Right.
That has to be clear. I'm doing this for my peace of mind.
Right.
So that I can sleep peacefully. And it's generally all of fixed income. I think now in India, so it's a spectrum, right? You have cash, you have FDs, you have liquid funds, and now you're seeing more and more liquidity in bonds as well, I think. With SEBI kind of bringing in a lot of regulations around it, digital platforms coming up.
Right.
So you can even get higher fixed income returns with more risk, of course. But overall, now these three should, like a liquid fund, an FD, and a bond, would form your kind of bedrock of, okay, this is relatively much safer. I don't have to see it go up and down all day, every day.
Right.
And then what more do I do beyond that?
Here's another interesting stat, right? So for all those mutual fund Sahi Hai ads, mutual fund Sahi Hai, you've seen it all over the place, right? Our AUM, that's assets under management for mutual funds in India, is 18% of GDP. The US is at 126%. And Brazil, which is not exactly a model for financial sophistication, is also an emerging market, is at 73%. So is this our scarcity mindset, ultra scarcity mindset in India, that of safety, of security, of not being able to take a risk, of clamoring for that government job? It's an overall mindset. Why do you think more Indians are not participating in something as simple as a mutual fund industry or the ETFs?
It is that. I think it's generally...
It's underpenetrated.
Yeah. Largely because of the fact that as the previous generation, I think now it's changing slowly, but the previous generation wanted something which they could see and feel.
Yeah.
And so it may not just be FDs. I think it's a lot of it is real estate, a lot of it is gold.
Yeah.
Across these three, these were the only three assets I think a generation or two above considered. Ki the stock market was always used as gambling. When I
Yeah.
talk to
Yeah.
my parents,
Yeah.
it's just that sattebazi. Why are you doing that?
Yeah.
Now that's changed.
Yeah.
But it's been these three assets which have been largely in the psyche of the Indian investor.
Right. So real estate, I want to talk about real estate versus financial assets. A lot of Indians do believe in real estate. In fact, I think there's a financial asset ratio where 60 to 70% of Indian assets are locked in real estate versus financial assets, whereas it should be the other way around, right? You should probably be more in financial assets. So what's your view on real estate as an asset class, given that the returns are abysmal?
I think it's become very popular because it had a golden period and now it's kind of lagging. But I would say the 90s and the early 2000s had a golden period in terms of the returns are phenomenal there. And just the requirement that, okay, I want something safe is why a lot of people kind of got
It's tangible.
Yeah. I know it's not going to go anywhere. There is a lot. So when running the platform also, we find like versus the US, for example, the Indian consumer has a large trust deficit. I think it's just been a kind of ongoing, you hear about scams, you hear about how people got duped. So you by default don't trust anything that is there. And so real estate allows you to sort of bridge that gap because I know it's there, it's not going to go anywhere. I think that's where a lot of its psyche and returns driven has come in. But it has to, I think still it has to form part of one's portfolio because when you look at it, you want uncorrelated assets, right? You want something which is two different things. One moves up, one other kind of shields it. So, or one moves down and the other shields it. I think that there is a role to play. Whether it's direct real estate or through funds and AIS, I think now that is a debate that one can have.
No, but I see, Rahul, see, it's also about the mindset. To Viram's point that he mentioned, it's what you've been conditioned to. If you've grown up in a business class family, for example, the family heirloom is gold jewelry. So you have loads and loads of it. You have it under your pillow, you have it in your closet, you have it all over. And the fluctuation of that asset class is not apparent and on the face. Very true is for real estate as well.
Yeah.
Um, Equities is, have you seen Rocky or Rani?
Of course.
Yes. So there is a Rocky also, there's a Rani also. Rani is the more stable and Rocky is the more effervescent. So there is emotion, there's highs and lows. So equity is like that. When you talk about fixed deposits and FDs, it is like there's no, have you seen Hera Fairy?
Yes.
So there's no head. So it's like the Babu Rao. Have you seen the character Babu Rao? He's always worried about his money. Kya hoga? So real estate and FD is catering to those kind of investors who want to see it within their closet, who want fixed return. They don't want hera fairy. They
Right.
don't want volatility. And gold also in some sense, will form part of that.
Yes.
So I think there is a category, and to the point that you earlier alluded to, having fixed deposits and having, digitized assets or, going into high-end volatile asset classes. In our fund management parlance, we call it the barbell strategy.
Yeah.
Now,
What is the barbell strategy?
yeah, in gym, you lift dumbbells,
Yes.
weights. So you see the ends are like nice and fat and plumbed up and the center is like flat.
Yeah.
In the center, you have nothing but the edges, your ends are bloated up. So that's extreme end. So one end gives you safety stability, the other end can give you that additional risk, and that's how you lift. So you're hustling for the muscle.
Interesting.
I think the entire ecosystem is available for you. It's about A, being aware of it. Second, experiencing it.
Okay.
Because if you do not experience it, you do not know what that asset class can deliver.
Right.
If Rocky did not propose to Rani, she would never have, got her into the bait.
Right.
And whoever knew that a guy like Rocky would get a girl like Rani.
I love your Bollywood analogies, and it makes it
Good at it.
makes a dry subject very interesting and a lot lighter as well. And hopefully the audience enjoys that as well. Now, Lakshmi, SEBI launched another interesting product in April 2025 that most Indians, I'd argue, still haven't heard of. It's known as specialized investment funds, right? Mutual funds are accessible to all, but perhaps they're not able to short the market. And you can shed light on that, on what shorting the market actually is. A PMS, and you can talk about that. It gives you flexibility, but the ticket size is a bit higher. And this is somewhere right in the middle, right? Maybe a 10 lakh rupee minimum. Hedge fund style strategies.
Yeah.
So can you just shed a little bit more light on what specialized investment funds are,
Yeah.
and how an average retail investor can put their money in that, and what are the benefits?
Absolutely. Since you say Bollywood, have you seen the movie Dil Dhadakne Do?
I believe I have.
Anil Kapoor, that dot part, a massive thing. You would have also seen that, right? Now, in that, you see so many families, right?
Yeah.
In the cohort starts from Anil Kapoor and his wife, and of course, then there's daughter, there's the son-in-law. So that is what this investment vehicle family is. You have a mutual fund vehicle, and it's a very diversified, distinct, differentiated. Everybody have their own quirks,
Yeah.
but then they're all coming together to solve a problem when there's a crisis.
Yeah.
So I think that's what a mutual fund does. You have like access to SIPs. Then you had PMS or you have PMS.
What is a PMS?
PMS is basically portfolio management service, where mutual fund is also a collective investment vehicle where all of us jointly can put in money, but the ticket size is like tokenized. Like I can start as low as 100 or 500 rupees per month and invest.
In a mutual fund.
In a mutual fund.
Yeah.
PMS does very similar stuff, but on a larger ticket size.
What's the ticket size?
50 lakh rupees.
50 lakh rupees.
That's
Okay.
right.
Yeah.
So it's slightly more bespoke. I can take that tad extra risk. And typically, unlike mutual funds, which cater to every asset class, including fixed income, PMSs largely cater to equities. They also have debt offerings, but they're sparingly few. So that's, and I can tailor make solutions much more rather than offering more cookie cutter solutions through mutual fund.
Okay.
And then there is AIFs, and I'll come to SIF in a bit because that's a new kid on the block.
Yeah.
AIF is alternate investment funds. Again, it's a collective investment. It's pooling in everybody's money. That's what we need.
Yeah.
But the ticket size is minimum 1 crore of rupees.
Okay.
So there you are able to offer more bespoke solutions, more asset classes, more illiquid asset classes, for example.
Yeah.
And cater to a slightly, I would say, more stickier palette. You know, I want long-term money. I can put money for 7 years, 8 years. I can even do unlisted, for example,
Right.
equities over there. So that's the palette. Now enter in this new, I would say kid, which is SIF. Now, SIF is basically a cusp between a mutual fund and a PMS. In terms of ticket size, it's combined, as you rightly observed, 10 lakh of rupees. But this allows me to do a couple of things. One is going back to Dil Dharakne Do, it gives me hybrid opportunities. It's not just giving me vanilla fixed income, vanilla equities. It's allowing me to merge the two and launch variations of that. Like you have variations in Teen Patti, variations in poker. Everybody's not happy with simple and traditional, right? And it allows me to, as you rightly alluded in your question, it allows me to buy a stock or an index. It allows me to short matlab selling it.
Okay.
And in that combination, create a structure.
Okay.
But that's a part of the structure and a strategy. And that's why it's first slightly more evolved than mutual funds or 10 lakh.
Give me an example of shorting the market. What exactly does that mean?
So I can buy a stock, like let's say index, I can buy a BSE index or an NSE index, we all understand, a Nifty or a Sensex. And when I buy it, at the same time, there are derivatives around these cash instruments, which is in the form of futures and options. They are very, very liquid, very, very traded in India, rest of the world. So when you buy something in cash market and you sell something through futures and options of the same cohort, which in this case Nifty or Sensex, that is for shorting.
Okay.
So what happens is, suppose I am very bullish.
Yeah.
I'm ultra bullish on the market, so I go and buy these stocks in cash or in futures.
Yeah.
Now Viram is ultra bearish.
Yeah. Bearish means he thinks it's going to go down.
I think markets are going to go down, or he thinks market is going to go down. So then he has a mechanism to short.
Yeah.
And here comes Rahul, who says, I have a long mindset, Lakshmi. I have a short mindset, Viram. Combined together, let me create a product out of this, which is one variant of what SIF allows.
So whether the market goes up or whether the market goes down, I can create a product that allows me to make money.
Which will allow you to make money, reduce volatility, and reduce the drag of your negative return. It is not that it will never give you a negative return because you're a market, as I said, but it allows you to manage those volatilities in your stride much better.
So essentially, if I feel that a particular stock is not going to perform well 3 months down the road, right? I can short that stock, which means sell that stock and buy it back 3 months later. So if I've sold it at 100, I can buy it back at 60, for example, in very simplified terms. So which means I'm shorting the market and I'm earning 40 rupees by shorting the market. Is that a right analogy?
It's very, it can't be more simplified.
Yeah.
Couldn't go the other way also,
Yeah.
and then you end up losing. It reminds me of the GameStop saga.
Which happened in 2021.
Yeah, where a large hedge fund was sitting on a short position and the retail investors just were like, no, let us
Right.
take this out.
It was a short squeeze.
Yeah.
Yeah. So that's, I think there's a movie called Bad Money or something like that, right?
Big Short, there was a movie.
Big Short is classic. I've learned a lot about finance through that. I actually got really interested in finance because I did a course on Coursera called Global Financial Crisis. It's from Yale, and it goes through the whole financial crisis. And Tim Geithner, I think he was Treasury Secretary at the time.
Yeah.
He's teaching the course. And I did that course, the 2-month course. I finished in 2 weeks. It was COVID time. And I also watched Big Short like 3 or 4 times. So each time I learned something new. And then I got into the digital asset space. So the digital asset space is a result of the bank bailout that happened in 2007, 2008. But we'll move on. I want to talk about millennial and Gen Z investing, right? So often, this is a cohort that's smart, that's driven, but somewhere this economic construct is not working for them. Um, I think this advice that we often hear from finfluencers and online that, you bought a stock in 1980 and in 2025, it will be worth so much 50 odd years later, right? That advice is not really working for the Gen Z because Gen Z wants to work hard, but Gen Z also wants to enjoy life. They've not grown up with scarcity, with that scarcity mindset that our parents grew up in. They haven't grown up in pre-licensed Raj era. They're digital, they're connected. And there's a lot happening in India right now with Gen Z, but I'm essentially talking about people who are in the market force, who are working, who are making decent money, who want to climb up the corporate ladder, but they don't want to lose themselves doing it. And they also want to enjoy life. It's the Instagram generation. They also want to see the world. They want to go to nice restaurants. And everything nice that you want to access is very expensive compared to what it was maybe even 10 or 15 years ago, right? So you want a fancy vacation, very expensive because it's in dollar terms. House, it's ridiculous. There's another interesting stat. Growing up, the houses that we grew up in, it used to be 3x of your salary. So it was affordable. Today, the same house is 10x of your salary. So the average Gen Z person feels that it's out of reach. What's your advice on investing for someone like that, who wants to obviously be part of, who wants to build equity, but this 8% a year, 9% a year is not quite cutting it for them?
It's tough. I mean, a couple of things, couple of additional traits that we've seen. I think this is also true for millennials. One is just being very opinionated and having strong sort of ideas that you believe in.
Yeah.
And I think in today's world, that actually is a good thing.
Yeah.
If you want to believe in, for example, climate change, and then you want to invest in those. So a lot of this generation, even we see on the platform, no companies that we may also not have heard of, they find out about them, do your own research and find out gems, right? And so if you're very passionate about something, you are likely to be a good investor in that space because you understand it in and out, right? So that's a thing that's worked well for the millennial generation, for the Gen Z generation.
Yeah.
I think something that does not work well and which is our sort of now tuning to sort of instant gratification, right? Social media, 10-minute deliveries, everywhere we just want it now. We want to be able to sort of buy it and then if it goes up or down, we want to sell it immediately.
Yeah.
I think that emotion or that kind of auto response to control that is very important because with the phone, with kind of if you're doing equities, prices moving up or down, you become very emotional in making your decisions and the one who can control that, I think will be able to build wealth over the long term in a better way.
Yeah.
Okay, let me
Another movie analogy?
I'll give you a related thing which I attended. I attended an event last week. It's called Backstage Siblings. It's called Bhajan Jamming.
Okay.
It's not jam.
It was great.
It was outstanding.
Okay.
It was at Geo Convention Center. There were 6,000 people in that audience. And I went with a bunch of my friends who are my age.
Yeah.
Where I'm going to be turning 50 soon. And I kid you not, that the audience over there had octogenarians, okay, who were sitting obviously on the chair. We were seated down, and I had people half my age who were maybe 70% of the audience.
So they had a barbell strategy.
They had a total bubble, and I was somewhere in the middle.
Yeah,
Okay.
yeah.
Why am I making this point to you? Because the two singers, Prachi and Raga, were siblings. They sang songs which probably my grandma would have sung maybe 30 years back. But it's so relevant today that you find the millennials and the Gen Zs grooving to that music.
Yeah.
Of course, they can groove to Coldplay also. I don't deny that.
Yeah.
तो कहना ये चाहती हूँ कि गुरु मंत्र doesn't change.
Yeah.
So if you want to go to Spain today, sitting in BKC, I still have to fly.
Yeah.
I can decide whether I want to take a commercial plane or a charter plane.
Yeah.
But to be able to afford the charter plane, that millennial either has to have so much of inherited wealth,
Yeah.
or he or she has to invest his or her own hard-earned money to be able to afford that charter plane.
Yeah.
So I'm saying the Guru Mantra did not change.
Yeah.
I can decide whether I want to drive to Goa today. Spain is just one example because it's inspired by the YONOs, the you only live once, the YOLOs.
Yeah.
Also, I have seen ZNMD, which is Zindagi Na Milegi Dobara.
Yes.
But उसमें आप narrative क्या देखते हो कि oh, these guys are going to Spain.
Yeah.
But yeah, they're all three accomplished individuals in their respective field, not just Ritik. The others are also equally accomplished in their domain.
Yeah.
So that drill is for real.
Uh-huh.
Now, how you choose the drill
Yeah.
is your prerogative. But it's only in the IG world or the Instagram world that you get instant gratification or likes.
Yeah.
For your investments to be liked, it has to compound.
Yeah.
And that compounding, mind you, Rahul, is slow brew.
Yeah.
You've seen Chak De movie?
Yes.
So what does Shah Rukh Khan do? Shah Rukh Khan creates a champion of teams, right?
Yeah.
And he creates from different states. But those champions need to be chiseled.
Yeah.
And that chiseling process is the investment process which compounds wealth for you. And that's how you win the trophy.
Right.
उसके लिए quick fix नहीं है.
Yeah.
So to all the millennials or the Gen Zs, instant gratification can come. See, you can trade, you can be disciplined, you can make those quick bucks. But compounding
Yeah.
is a boring process.
Yeah. It's unsexy. It's slow.
It's like bhajan jamming. I mean, you saw so many of them groove to that.
Yeah.
And it's really how. I mean, I was super surprised to see half my age kids there.
Yeah.
And it's so great to see that.
Yeah.
And that's why I go back. Guru Mantra doesn't change.
Okay. So let's say you've got a lakh of rupees. Yeah. I'm saying the average Gen Z probably in the workforce has a lakh of rupees. Now they're paying rent, they're dining out, they may want to travel as well, right? These are we're all not just a spreadsheet. We're also humans and we have to be reasonable. So they do want all of that. But how would you spend those 1 lakh rupees? What percentage of that would you allocate to non-negotiable, boring, park it for 30 years kind of investing?
It's tough. It depends on kind of the lifestyle one wants.
I understand it's not cookie cutter,
Yeah.
but let's say you want to build wealth for the future as well and also have a reasonably good time now as well. So what would your advice be?
What do you need in Mumbai to kind of live a decent life? I would say anywhere between, actually that depends on whether you're paying rent or not. If you're not paying,
Let's assume first you're not paying rent, which is, I guess, if you're privileged. And then we'll come to if you're paying rent and you may have to alter that strategy slightly.
so if you're not paying rent, then a lakh is actually good for you to.
We're just choosing a lakh of rupees for round numbers. Yeah.
So you can do a lot with that, basically. If you're not paying rent, then your discretionary spend would be maybe 30,000-40,000 a month,
Yeah.
right? And the rest, I'm assuming this is all again post-tax, but the rest, what you should be doing is sort of investing it even before you spend. So ideally, as soon as you get the lakh, maybe you put in 50% of it or 40% of it into whatever you're investing in.
Yeah.
The easiest to start with is have your safety net, which is, let's say, an FD, so that you have a corpus which is not kind of fluctuating.
Yeah.
Post that, you would want to do maybe a combination of mutual funds.
Yeah.
And eventually then comes the global markets. I feel like somebody who has maybe a saving of 10, 20 or so lakhs, then should start looking at international investing because then you have a base.
Yeah.
Right. And so I think, that's the simple, there's no complication around it.
Yeah.
That's what I would think.
So I'll bring in food. I did a lot of films, so let me bring food in yes. I'd say take an 8-inch pizza.
Yeah.
And that's your total pot of this lakh or 10 lakh or whatever the number
Yeah.
is. Cut it into 4.
Yeah.
Okay, so that's like 1/4 each part. I'd say even before you start eating the pizza, remove one slice.
Yeah.
And that slice mandatory is your investments.
Yeah.
Come what may. I don't care what you do about the 2/3, but or the part of it, but 1/4 of this has to remove and compulsory go into an investment vehicle,
Right.
such that if the stock market shut tomorrow and your money is all locked in, you don't need the money.
Yeah.
I think that's the principle we need to imbibe. I mean, I'm giving you a very theoretical way, but that's a very hard-hitting way to explain
Yeah.
to somebody who's just starting off.
Right. So you don't even see that,
Yeah.
goodbye.
It's finished, shut it, forget it.
Yeah.
Let that sleep like Kumbhakaran,
Yes.
and then you have to do Nagara door bajawing to be able to lift it up. But
Yeah.
that's we will.
Wake it up after 30 years.
That is right. That is right. That is your true wealth compounder.
Okay.
And when you are left with the remainder of the pizza, which is the 3 pieces,
Yeah.
I'd say, and I'd agree with Viram, I'd say that keep a small safety net. See, when you are in your compounding stage, when your growth stage is happening, assuming you're getting this a lakh of rupees to spend every month, or this is your jeb kharchi or whatever, your agility is high.
Hmm.
The body will lachak zyada, but the body is warmed up, pump it up.
Yeah.
Let your heartbeat go high. So I'd say I would put bulk of it into adrenaline rush asset classes like equities.
Okay.
It's like a bungee jumping,
Yeah.
flooding, right?
Yeah.
But it's okay because body is warmed up. I can pump in more.
Yeah.
So let my heart rate go up. I'd do that. And then I would keep my safety net and all of that, but that would be at the tertiary end. And within that, I'd also weave in the geographical spread because, as I said, I can do a half enough pizza. I'd have a 4 cheese pizza here and I'd have all the veggies here. So even when I'm eating trash or junk, I'm making sure that my nutrients are there. So I think that diversification piece is also equally important.
Right.
And then you choose your mojo wherever you want, whichever country you like. But I think that's the way I'd spread. And within that, a tail end will definitely go to gold.
Right.
Irrespective of what age you are. And today there are great ways of owning that gold. You don't need to touch and feel your gold.
Okay.
You can own paper, go to ETFs or whatever.
Right.
So I'd say that's the way I would slice the investment pizza.
Okay.
I'll just add one point and continuing kind of the pizza analogy. One hack that I found which helps because all of us have these guilty pleasures, right? You want to buy a very fancy bag or you want to go fly business class once when you're traveling internationally. So what I've started doing is kind of put my guilty fund aside every month.
Yeah.
I put 10,000 aside and I know that I'm just going to splurge that
Yeah.
every month. And so then the rest of my money is not actually going down. So now I know that now this is not going to be spent anywhere.
Right.
This is the limited money that I have to spend on because everybody, millennials, Gen Z, wants to do something that is unique.
Yeah.
So
Yeah.
just put that unique spend money aside. That helps you kind of budget for that.
So I bank with HDFC and they have something called a passion fund. Now that could be whatever you want. You want to buy a car, you want to go on vacation, you want to travel, and you can keep parking some money aside in that every month until it, reaches your target number, and you can just splurge that, So that's your cheat fund, you can call it that. But it's really interesting what you say, Viram, because you first said, FDs, mutual funds. As someone at Vested who talks about global equities, I want to give you the India versus the world stat right now. Over the last 10 years, the US index, which is the S&P 500, has delivered 17.2% compounded annual returns. Now, India's Nifty 50 in the same time has delivered 11.2% returns. And I think we are ranked 5th out of 9 global markets that were tracked. In 2026, we're the second worst performing market globally at minus 9.5. So what are my options here to invest overseas? The rupee has also depreciated against the dollar. When I went overseas in the late 90s, the dollar to rupee was 35 rupees. Today is 95. In the last year itself, between 2025 and 2026, it's dropped 10%. So I'll come back to that, but let's talk about global investing for a second.
Oh, it's very, very important. And thankfully now, over the last few years, people are kind of increasingly becoming more and more aware.
Yeah.
In diversification, there are different pillars that you base your portfolio on. The most important one, which was the geographic diversification, was missing for a lot of folks, like across all of the asset classes we spoke about, equity, fixed income, real estate. All of these can actually have a global flavor to it as well, right? So that geographic diversification basically helps you protect against currency. Like you spoke about, like when we started Vested, the rupee was at 70. Now it's close to 96. So a lot of that eats into, even though our wealth might be growing in India, it eats into our ability to spend abroad.
Yeah.
If we're traveling abroad, if we're studying abroad, all of that becomes just more and more expensive for us.
Anything aspirational you want is priced in dollars. You want a foreign vacation, you're spending in dollars. You want a new iPhone, essentially you're spending in dollars. A fancy luxury car, if you can afford one. A Mercedes, C-Class used to be 40 lakh rupees not very long ago. Today it's 70 lakh rupees, right? So everything nice that I want, branded clothes, all of that is priced in dollars and so that asset inflation or whatever you call it, luxury inflation is 30, 40, 50%.
Exactly. And so it is imperative that one kind of diversifies internationally for the currency, for the fact that returns also from that standpoint, just purely tying yourself to the India story, while it's great, of course, you need some part of it diversified internationally. Nobody's saying that put all of it,
Yeah.
but maybe a 20, 30, 40% should have global exposure.
Yeah.
Like one stat, for example, in the UK, 40% of individuals' financial assets are diversified internationally.
Yeah.
US and Japan, 20%. China, even though it is way more restrictive in terms of foreign exchange, like how you can send money abroad, 5 to 10% internationally diversified.
Yeah.
India today is sub 1%.
Okay.
So there is big sort of headroom. And I think as the country becomes developed, people realize more and more. So it's just the beginning of
Right.
starting to invest internationally.
I'll come back to global equities in just a second. But, we talked about the rupee losing about 4.5% on average against the dollar for the last 34 odd years, right? Now, why does this happen? Is this a structural flaw in our economy? Politicians on either side of the aisle blame each other. The opposition blames the ruling party, and when they're back in power, they blame each other. Um, some argue that this is good for the economy because it makes our exports stronger. But then again, we are also importing 85% of our crude. So is this by design? Is this good for our economy, bad for our economy? Is this a structural flaw? And is this a secular trend where 5 years, 10 years from now, the rupee will cross 100, 105, 110?
Since you said global investing and you're linking it to currency, and of course, there's a very strong linkage. Again, I will bring the food linkage and I'll come directly to your point. Have you ever eaten Karela?
I don't particularly like it, but yes, I have.
Exactly.
Yeah.
So there are Karela moments in investing. So nobody likes. Typically, people don't. In my house, I'm the only person who likes Karela. Maybe because I'm finance market oriented.
Yeah.
But there are Karela moments in
Yeah.
the portfolio, and investment world is full of that.
Mhm.
And to temper the Karela, what you do is if you cook in the kitchen, you add a little bit of jaggery,
Yeah.
sugar. Jaggery is a better sweet substitute. And that is what diversification is all about, geographical diversification. It adds that tad sweetener to your portfolio.
Yeah.
When the Karela moments hit you, when there are bitter, sour moments in the investment world,
Yeah.
it could be India, it could be currency. And that's where I bring the currency in, that what happens is that in India, we run twin deficits, as they call the fiscal deficit
Yeah.
and the current account deficit.
Yeah.
Now, हिंदी में उसको बोलते हैं आमदनी अठनी खर्चा रुपया. So you are definitely expending more than what you earn. The resultant is that. And by nature of that, obviously, because every trade, every good that you import, you mentioned crude oil, I'm talking about gold, I'm talking about electronics. Till some time back, we used to we used to be a net importer of toys, khilona.
Yeah.
Now, all of that is imported in what? In dollar terms.
Yeah.
So the more you are demanding that currency which you do not control, automatically your home currency has to get weaker.
Yeah.
So that is, I would say, a natural progression for our country's currency going forward.
Yeah.
The intensity can vary. Today, we are in a geopolitical, we know what's happening in the west of Asia. Crude is becoming dearer, more and more expensive. Gold is becoming, going higher and higher. So therefore, the amount of dollars that you have to use to get the same amount of gold or anything into the country is becoming higher and higher. And that's why your currency, when you went to outside India, you paid $30, today you're paying 90 or $95. So structurally, you will see a graded, we call anywhere in the band of 3 to 4%. And these get exaggerated in times like these.
Right.
So therefore, tying it back to the question that you asked before, therefore, irrespective of whether it's 3%, 4%, or times like these where we see 9, 10%, a natural sweetener to a Karela moment in a portfolio is inevitable. Now, can you put so much of Karela and just keep so much of jaggery and just a little bit of Karela? No, that's not the way we intend it to be. Therefore, keeping it as a tail end to your structural India story, because this is good for your financial health, because India is still the fastest growing economy in the world.
But if my money is losing value at 4.5% on average for the last 34 odd years, right? So this is 35 odd years. So this is a long enough period to get that data. Why bother with the Indian market at all?
No, Rahul, see, the point is different. Only when you are expending in another currency which is not your currency, then this purchasing power is hitting, okay?
Yes.
When you are earning in India and in rupees and expending in rupees for bulk of your portfolio, bulk of the moment, then that derivative or the resultant currency impact that you're seeing is a function of how you are allocating, like for a foreign travel, for a foreign good purchase, or for any investment for the matter. That is when that role comes in.
Yeah.
So this point that you mentioned is so relevant when a foreign investor is allocating money to India.
Yeah.
So she will say, hey, look, your country is compounding at 12-13%, which is how we've seen in the last 10 years.
Do they minus out the
They
4.5%?
Yes. So they will minus out their four because they are earning in dollars.
Yeah.
But they are deploying money in rupees.
Yeah.
So when they take back
Yeah.
the same currency returns a year later or 2 years later, they take that much lesser.
So if it's 12% that Indian economy is growing at, I mean, it's growing a lot lesser.
Yeah,
right?
no, I'm talking about the nominal GDP growth.
Yeah.
Assuming you're growing at 6.5%, you add an inflation of 4 to 5%, broadly 11 to 12%. That's the math we arrive at.
Yeah.
You remove. So assuming Indian equities will give you 11%. Let's simplify it.
Yeah.
10% return.
Yeah.
If currency gave me 4% less return, the dollar did 4% better than USD, then 10 less 4. That is what a foreign investor takes home.
Okay.
But you, me, Viram, all the audiences who are Indian investors will take home 10%.
Okay.
That's the math I was trying to tell.
But one can also argue that the reason you're deploying that money in the Indian equities and getting a risk-adjusted return and taking that chance versus putting in an FD is because you one day want to buy a house, one day want to take that foreign vacation, one day want to buy a nice car. So the purpose for putting money in the market and taking that risk is to be able to afford the nice things. And all those nice things are then priced in US dollar terms, where our currency is depreciating.
No. Just one point to add here is that, we've had various villains, right?
Yeah.
From the real life.
Yeah.
We've had Amrish Puri, we've had Prem Chopra, we've had Shakti Kapoor.
Yeah.
And we've had Shraddha Kapoor also in the movie Stree, who acted like a vampire.
Yeah.
So they are two different, but there's a villain which is impacting our investments in
Right.
real life. That is inflation.
Okay.
So to beat that inflation, you have no choice to put money into an asset class like Indian equities.
Okay.
Then there are these other vampires which come in the life, which deteriorate the purchasing power.
Yeah.
Which includes your propensity to spend outside the country.
Yeah.
Those are the three moments, which is that Shraddha Kapoor coming as a vampire. So that's a different thing.
Okay.
But for bulk of the issues, Rahul, this gets solved because that villain that you are backing in real life every day as an Indian investor,
Right.
spending in rupees,
Right.
spending in rupees is inflation. So
Okay.
you're still solving for that.
Okay. Now, let's assume I want to invest in the global market,
Yeah.
right? I have my Indian equity portfolio. I want to invest in the global market. Now, essentially, when you talk about the global market, you're by and large talking about the US. And even within that, you're essentially talking about the tech economy,
Yeah.
right? Used to be called FANGs, your Facebook, Amazon, I think Alphabet,
Yeah.
Netflix, Google. No, so I think there was another.
It was Fang, then Fang became Fang Man.
FANG became
Yeah.
FANG became Mag 7.
Yeah.
Mag 7 has now become Mangoes. Now, Mangoes is essentially your emerging tech, which is your AI and, so Mango, there will be, I think there's, which are the Mango ones? Yeah, there's Meta, there's Anthropic, there's NVIDIA, there's Google, which is Alphabet, there's OpenAI, and then there's SpaceX. So the new term has been coined. That's how fast we're moving. Can I also invest? First of all, tell me, how can I invest in the global equity market?
Yeah. So basically, there is kind of a regulation that covers how much you can invest and where you can invest from India.
Yeah.
India is a capital controlled economy, which means the government controls how money goes out, how much money goes out, and how much money comes in.
Yeah.
Right. So for us as individuals, we have $250,000. So 2 crores jitna hai every year per person that one can invest internationally.
More than that today, right? More than 2 crores today.
More than 2 crores maybe now.
Yeah.
Yeah, correct. But that includes all your overseas spend. So that includes if you're paying for education abroad, if you're paying for travel. So all of that comes in that money.
Okay.
Right? So you have to allocate accordingly.
Okay.
And then the government has said that, okay, what can you invest in? You can invest it in equities and you can invest it in funds.
Yes.
Those are the only things you can do. You can't do like derivatives abroad. You can't do commodities abroad. All of those things are not available. So simple vanilla investing because the government wants that you build dollar wealth as Indians. That's a good thing in the long term. Short-term impact is the money is going out in dollars, right?
That's known as the LRS.
Correct. That's the liberalized remittance scheme of the RBI, the LRS.
So each individual over the age of 18 or even
80, anybody who has a PAN card.
anyone who has a PAN card
Yeah.
can spend up to $250,000
Correct.
overseas.
Correct.
Okay.
Yeah. So then you have the option of opening a brokerage account, like how we do with Vested, and or the other option is you invest into a fund. And there are now a lot of funds that are coming through GIFT City.
Yeah.
There are a lot of funds in Europe also that are available. So you can pick that option, which we also provide, or you do your own direct investing where you pick stocks and ETFs. And now within the stocks and ETFs world, one very interesting thing that allowed our business to exist is you can buy fractional shares.
Okay.
So an Amazon stock, which is maybe $4,000, earlier, like 5-6 years ago, you had to shell out $4,000 in one go. So you'd have 4 lakhs for a stock.
Yeah.
Which just did not make any sense.
Yeah.
Now the US has fractional investing, so you can buy even $1 worth of Amazon. So you build your portfolio over time.
Yeah.
Right.
Okay.
And yeah.
So Viram, when you talk about global investing, you're essentially talking about the US. Or does it make sense to invest in other markets as well, like South Korea, China, and maybe in Europe as well?
Yeah. So if you just look at the global split of market cap, the US is 60%.
Yeah.
The rest 40% is the rest of the countries. India is, as the latest number I think I saw was 1.9%.
Yeah.
So there is a big universe out there. 60% of course will be the US and there are great opportunities there. But there are plenty of opportunities outside of the US as well. And you won't believe it. Like that's the number one thing that our customers are asking us. Because I think there is a trend where people are looking beyond the US as well, especially in this AI world, especially in the China plus one, like Taiwan's become very interesting. When this entire West Asia conflict happened, people wanted access to UAE markets because all of the companies there were dropping.
Okay.
So I think the world now, pretty much the world's 10, 15 exchanges are important and one can find great companies across all of these, beyond the US.
So through your platform, Vested, can one invest in direct equities in these markets?
Not yet. So we started with the US markets, but very, very soon, the next month or two, we are adding another 15 countries on the platform.
And can I invest through GIFT City in Gujarat? Can I invest in GIFT City in these equities as well? Via GIFT City, sorry?
Yes. So GIFT City, what it does in this direct equity world is that it basically acts as an India regulatory layer. So far, there was no license in India which made you say that, okay, an Indian regulator is going to govern international investing.
Yeah.
Now GIFT City is playing that role and a lot of the options for international investing, the direct or funds will happen through there. So it's just the same journey, but with an India regulator. That's how GIFT City comes into the picture.
Okay. Now, there's one caveat that I want to talk about that perhaps a lot of people don't know. There is an estate tax, right? What exactly is an estate tax and how is it different investing through your platform versus investing in GIFT City?
So basically, the estate tax rule is mostly in the US, where if something happens to you, they basically tax the inheritance that you get.
Yeah.
The next in line, the heir that they get. If you're a US resident, that threshold above which it gets taxed is about 12-13 million.
Okay.
But if you're a non-US resident holding US assets, that drops to $60,000.
Okay.
So anything above $60,000 if you're holding, and if something happens to you and your next has to claim it, they would have to pay an estate tax, which is up to 40%. It slabs to the IRS. Then your brokerage account will be available to the next person.
Okay.
It's actually something one should definitely consider as they're investing serious money.
Okay.
The ways to kind of navigate it, one is don't hold the asset directly. So hold it through an ETF, or a fund which is listed outside the US. So there is this entire UCITS ETF, which is Europe domiciled ETFs.
Yeah.
Pretty much the same stuff available in the US, but in Europe. So that avoids it. GIFT City funds avoid it. So any asset holding out US stocks from outside avoids it basically. You can also gift your shares. So you don't need to keep holding it. As you get older, you can gift it to your relatives or to your family members so that your exposure reduces over time.
Okay.
Those are a couple of ways one can manage it.
Okay. And I can gift it to my family through your platform A.
Correct.
And do you also offer non-US domiciled funds?
Those are all that will go live now with these expansion of countries.
Okay. Um, what about you? You are in the whole alternate investment fund space. So, do you also promote international assets such as buying international ETFs through your funds?
No, so I'd say that the current scheme of offerings that we are planning to do is to cater to the diversification of asset classes within India.
Okay.
So, for example, everybody loves real estate in India.
Yeah.
But how many of them in India have aspiration to own commercial real estate?
Right.
And then how can you buy physical offices, right?
Okay.
The rental yields for commercial. If you buy commercial property and lease it out, the rental yields there are way better than what you're getting in residential, like buying a house and leasing it out.
Sure.
So how do you play on that? So we are offering, we are working out on solutions of that. Second is to the point that Viram mentioned that AI boom is proliferating. So people want to, and you mentioned about Korea as one, semiconductors, Taiwan. So we are saying the application layer
Okay.
or the inferencing ecosystem in India is yet to kick off. So how do I create a basket of plays in the unlisted space, which offer you a play on AI in India?
Okay.
So those are the kind of plays that we are working on. And also another interesting thing is we know about long only funds and we discussed that earlier on. But how do you create a multi-strategy, a multi-asset class, which has fixed income, equities, gold, other commodities, and create a basket around that and try to create absolute returns, which means uncorrelated to what's happening across the world. So, and
Sure.
some of those strategies,
Okay.
they all come under the non-traditional, the alternate space, where world over there is crazy, I would say, proliferation and acceptance. In India, that space is just picking up. तो रुमाल डालना जरूरी है. So we
Okay.
are right there, right?
So, no international exposure through your funds?
Not yet.
Yeah.
Yes, in phase two, there is, the engine that we are creating on the systematic, like the quantitative investments are something which we are betting big on
Yeah.
because we understand the AI space, we understand the machine learning space.
Yeah.
So how do you reduce human intervention while making an investment?
Got
Now the engine is what we are going to create. Now that engine can power Indian markets,
Yeah.
or Indian indices. It can power a Korean indices like a Kospi or a Nasdaq. So that's the kind of engine that we are preparing. So hopefully next year around the same time we should be ready.
Great. So if I want to invest in direct equities, like if I want to buy Nvidia or Apple or some of these other fantastic companies, I can do it through Vested. I can also invest in some funds through Vested and also soon enough invest in non-US domiciled funds, which kind of mitigates the risk of that $60,000 estate tax that's applicable to me if my portfolio value crosses $60,000 and if something happens to me suddenly.
Yes.
If I were to pass, right? Got it. Now, another asset class that I really want to touch upon is the digital asset space, also known as crypto. India, nobody talks about it. At all these wealth conferences, nobody talks about it. Yet, internationally, especially the US, it's gaining a lot of momentum. Can you guys talk about it a little bit and shed some light on it? Or feel free to, we can have a three-way conversation here.
So, Rahul, when I did an asset allocation presentation
Yeah.
2 months back, I actually put an image of a thali, like a platter with all food and all into it. It had the carbs, the vitamins, the good fat and all of that. And there was like a rolled papad on top of it. And somebody in the audience said, you spoke about everything. You didn't speak about the papad. And you just asked about that. So
Yes.
the answer is that for me, that in that thali, in that asset allocation, it's the papad, which is a good palate, enhancer in terms of taste. But I tell people that you need to ask a 20 minus in age, and I am 40 plus, to be able to talk about it.
Okay.
But I see that, you definitely have a lot of interest. You track the space, you're an investor in the space. So at least between me and you, I definitely feel you're more qualified to talk about that.
That's a compliment because you're so accomplished yourself. No, I feel, look, RBI doesn't like it. They probably have their reasons. They don't like the word cryptocurrency because that's a threat to the sovereignty of our currency. So I get that. There's AML, there's anti-money laundering rules, there's terror financing, all that happens if they don't have oversight. I get that. Having said that, there's a lot of Bitcoin has been the fastest growing asset in the last 15, 16 years. It's been battle tested. I think there's room for that in your portfolio. The younger cohort, the Gen Zs and the millennials, are looking at that. They call Bitcoin digital gold. Now that's debatable. But one just has to skate to where the puck is going. If you see what's happening in the US, Larry Fink, BlackRock Asset Management, AUM of $15 trillion, has called tokenization, which means all your stocks and bonds will eventually be settled on a blockchain layer. So he's called it the future. He's got a money market fund with $2 billion in tokenized assets. The crypto space is just $2 trillion, 2.2. And the entire asset, if you count all the asset classes, real estate and stocks, bonds, gold, it's 500 odd trillion in the world or more. Now, if even 5% of that goes on chain, which means on a blockchain, we're looking at a market of $50 trillion odd, right? So there's huge growth potential there. The US has passed the Genius Act regulating stablecoins. The Clarity Act is soon going to be passed. And once that's passed, that puts some sort of, pressure on the RBI here to accelerate their guardrails and create a system where Indians can officially invest and institutions can also invest in this space. So that's my view on it. It's not sexy at the moment because everybody's saying the story's over. AI has eaten crypto's lunch. There's a lot of liquidity being channeled towards AI globally. The crypto space hasn't had its ChatGPT moment because what's happening is a lot is being built under the hood. What happened 30 or 35 odd years ago with the internet, building the TCP/IP protocol, which retail investors don't see. It's not a fun story to read, right? The exact same thing is happening with tokenization here. So I would say tokenization is the TCP/IP of 2026 and beyond. And it's not as interesting a story as a humanoid robot, cooking, dancing, or what's happening with Claude and ChatGPT and Anthropic and all of that, right? So it's not as interesting a story. There's a retail use case for this, and that story is yet to play out, and that narrative is yet to play out in crypto. Sorry, I'm rambling.
But
But
I have one more sort of question for you in this space. In sort of the digital asset space, there's also a strategy which I also personally kind of look at is getting exposure to it through companies that are working in the space, right?
right,
The likes of MicroStrategy, likes of Coinbase.
yeah,
There's a lot of options available outside India. I
right.
want to get, and I think you also look at that kind of a strategy.
Yes, so Coinbase, as of May 19th, 2025, that's last year, is now part of the S&P 500, which means every pension fund, every boring 401k in the US, everyone who's investing in their 401k, every employed human being, most of them, now they indirectly have they have access and exposure to that asset class, right, via Coinbase. And Coinbase is a fantastic company, in my opinion. It's not financial advice. I'm not qualified for that. But yeah, that's another way perhaps to get exposure to that space. Yeah. Cool. Moving on. I can understand the apprehension why you guys don't want to talk about crypto, but this is something that it had to be said. But we can talk about other alternate and exotic investments. There's wines, watches. You mentioned art earlier. The classic, cars as well. So, what's your view on those?
So see, as the name suggests, these are, vintage, these are collectors, I would say, portfolio sort of a thing. Um, India does not really have a conduit or a vehicle, formal vehicle to be able to cater to this. Globally, I know that there are options available. And this is like, beauty lies in the eye of the beholder. Yeah. And when you stand in front of the mirror, you are the beholder, isn't it?
Yeah.
So I think it has very niche acceptability. For example, the closest I can think of is art exhibition. Incrementally, wealth management in India is curating art exhibitions where they
Right.
curate art across the country, across the globe also, in fact, and present that to their ultra high net worth individuals. And it's a true diversifier.
Okay.
Um,
For someone who's already wealthy, arguably.
no, even for them, because wealth has to beget wealth, right?
Yeah.
Though if you had everything in your portfolio, imagine if you've done everything in terms of travel, you've been to every country, every continent. You want to go to Antarctica, you want to go to the Arctic, tax
Yeah.
specialist. Only the wealthy can do it, right?
Yes.
I can't imagine somebody who's just starting off saying that, oh, I'm a connoisseur of art, so I'm going to collect art.
Right. It's also illiquid.
Super
Largely.
illiquid. Yeah, super illiquid. So maybe tokenization, to the point that you made earlier, tokenization on these asset classes, creating some sort of an NFT could be a trend for the future. I don't know how it's going to proliferate, but it's an asset class worth keeping a placeholder on,
Right.
especially for the ones who are seeking true to label diversification, and valuation is another big game over here. So there are now formal valuers of your what collection, your art collection.
Yeah.
I don't know. There are wine valuers. I have no idea.
Yeah.
I think that's the term is the best valuer for that. I have no idea for that because I'm a teetotaler. But I think that's where the wealthiest few are, and it's a global trend.
Yeah.
So people. I know of some wealthy individuals in India who are creating an art museum.
Yeah.
First of its kind in India, for example. So I'm saying all of those things are something, but as I said, these are all tail-ended proposition because the word
Sure.
you said is illiquid.
Right. And you mentioned NFTs. NFTs are actually, art essentially captures the cultural zeitgeist of its time, and NFTs are doing that for this generation who can't afford the expensive
That's good.
Picassos, Kandinskis, Husseins, Razas. So NFTs are doing that. There are some fantastic NFT artists. There's Beeple, who sold his artwork for 69 million a few years ago, $69 million. There's X Copy. There's Beeple. So I think there's a lot happening in this space as well. So I'd encourage people to keep tracking it. It's there's money to be made if you stick around, and it's also from a cultural perspective, it's super interesting. Now, one of our final questions before we move on to the rapid fire, the wealth mindset, right? What do you think the genuinely wealthy Indians do differently with their money that most people never learn or they don't practice?
Well, as commonsensical it might sound, but I must tell you that they let their money grow the very boring way. Uh, Genuinely, it is like germination of a seed.
Okay.
You can't plant a seed. You
Yeah.
don't just put in a seed and say that, oh, every day, where is it growing? Where is it growing?
Yeah.
They know how to eat the patient pill.
Yeah.
And I think that is the truest form of wealth creation and growing that wealth. So I think, and this, they say that a photo print. I know now we are not used to that mode anymore. It says it develops in the dark.
Right.
So I think being boring about it, being tight-lipped about it, and being as simpleton about it
Yeah.
is the shortest way
Yeah.
of growing rather than, tom-tomming about it.
Right.
And I think that's what typically my interactions with the wealthy
Right.
of the country, you've noticed it.
Yeah.
And they're very unassuming about it.
Sure. Got it.
I think there's also a level of self-awareness, right?
Yeah.
So, earning money and growing money is two different skills. Knowing that it's two different skills is one.
Yeah.
And the second, whether you're good at growing money is also important. If you're not, then outsource it to a fund manager or hire somebody in-house.
Right.
Don't try to, dabble into it by yourself. So I think people who have grown their wealth are very self-aware. I am not good at it. I will have my team of fund managers do it. Let them pick at it. I don't have time also to do it.
Right.
Or some that enjoy it and really go in depth,
Sure.
then manage their own money, which is
Sure.
And one more thing, Rahul, is that whether you are at the cusp of that wealth,
Yeah.
or you are the pinnacle of wealth.
Right.
What is the one thing underlying between all of these people? They all at different points in time have paid their share of Guru Dakshina to the market.
Yeah.
Irrespective of which market you're operating in, doesn't matter.
Yeah.
So I think, they've come up that full circle, and that is the reason, they believe in the power of collaborating with the professionals.
Yeah.
Because you don't know it all.
So this is, this hits home, a very personal story. In 2007, 2008, in the stock market crash, I sold all my stocks and put my money in an FD because I said this stock market thing is crap, right? And I'm still regretting that to this day because that would have been the time to just hold on or perhaps add more capital and let it ride for the next decade because the next decade was just fantastic, right? So I paid my Guru Dakshina early on in my journey.
People get it right all the time.
Yeah,
The liar and the lucky.
there you go.
So these are the people who get, and for other mortals like us, we have to pay our Guru Dakshina. And all is the GD.
You,
We are used to JD, right? But this is the GD. And not the group discussion that we do in B school
Yeah.
versus the M school, which you have to.
So yeah, one financial mistake to avoid is, don't try to time the market. It's not about timing the market. It's time in the market, right? Okay. So now let's move on to our version of the rapid fire. It's called Plush off the cuff. Some quick 5 questions. The one stock that you're super bullish on, domestic or international?
India stock.
Domestic or international?
Domestic is I'm bullish on the stock called India.
Okay.
And international for me is still the US.
You can't mention a particular stock. You're mentioning
I'm
markets.
bullish on the stock called India and I'm bullish on the stock called US.
Okay.
Bullish on India for sure. Internationally, I like a couple of companies, not advice, but
Yeah.
I like Robinhood because of the space that I am in.
Yeah.
I like Shopify because it's kind of a anti sort of, anti, but not AI play.
Sure. Okay. The best book on investing and wealth creation that you've read?
I think The Intelligent Investor, I think the classic, it's
It's also very long.
yeah, it takes a long time to get through it,
Yeah.
but that's all you need, I think, if you just read that.
Okay.
So have you read this book called Liar's Poker?
Michael Lewis?
That's right.
Yeah.
It's about LTCM. It's all about greed and fear.
Yeah.
That's what investment is all about.
Yeah. Perhaps a simpler example that's also more recent is The Psychology of Money by Morgan Housel.
Of course, that's
It-
brilliant.
Talks a lot about wealth is something you don't see. Wealth is the vacations not taken, the fancy watch is not bought.
Everybody's story is different.
Yeah.
I think that's the most.
Absolutely. Yeah. Okay. I guess we've covered this one, but the one financial habit that separates people who build serious wealth from those who don't.
The ability to differentiate investment mentality versus savings. I think that is the grassroots, and when you're able to reverse that formula,
Yeah.
I think you've conquered Mount Everest.
I think one more also that I've seen is the ability to double down when you see a good opportunity.
Okay.
Like it's like poker, right? You have a good hand, no, you
Yeah.
have to go all in. You can't be like, I'm just going to put in a little.
Yeah.
I think that's what the wealthy do well.
Okay. In 20 years, do you see the gap between the rich and the poor getting wider or narrower?
It's tough one. I think 20 years, the world is going to look very different. And there have to be different rules to play in that kind of world, which is going to be a.
But I think polarization is here to stay. It is just the dynamics of the way the world is behaving, and it's not just one geography.
I have a take on this, if I may. I think the world is going to be differentiated between those who hold assets and those who don't. So no matter what politician says what, which politician says what, if you're not holding assets, you're going to be at the shorter end of the stick.
It's a good way to put it.
Yeah. And final one, if you had rupees 10 lakhs to invest today, where would you allocate it?
I have all global. So in my entire portfolio is in the international markets.
Where would you put it? Give us stocks, break it down.
So I've been doing a lot of private market investing globally, actually, because I feel like now that my portfolio is at a decent size, I can dabble into that. So I recently did like a private market deal in Boop, for example. It's a product I believe in. Did some in SpaceX last year. So more private markets is where I'm putting my money in.
Okay.
But not meant for everybody. It's a
Sure.
certain risk profile only.
Oh, fair enough.
See, I'm a very boring investor.
Yeah.
Okay. I am, and I will be, because I think for me, compounding wealth is if inflation is hitting me at 6% plus 7%, I want double of that returns in my portfolio. So I'm not a very aspirational investor who wants to double my money in 3 years. It's
Yeah.
not that for me.
Yeah.
I'm okay if it doubles for me. It's anecdotal or
Yeah.
accidental. So I'd say for me, in the last 20 years of my investment journey, bulk of my investments have been in equity. Because I'm a salaried employee, I'm getting my annuity, my income on a monthly basis. So I keep topping up my, I do a lot of SIPs or systematic investment plans. As I said, it's very boring, but it's durable. So it's lived to its course. And of course, tail end portfolio of my portfolio is in real estate, obviously in the house where I'm staying,
Yeah.
and house where my parents are staying. So that's the only real estate I own. Of course, I have gold and very little of diversification, which is geography and currency.
Okay. And when you say SIPs, are you investing in SIPs in direct equity or in ETFs?
So no, I do it only in mutual funds and largely mid markets, which is mid cap and small cap mutual funds, because that's where the true compounding story unfolds.
Okay.
And as I said, the tail end takes care of everything, including startup opportunities, is something which I've just recently started in the last 3 years,
Right.
because India is the land of entrepreneurial spirits.
Yeah.
So if you back the right promoter, I always believe bande hai to dhande hai.
Huh.
So if you are backing the right entrepreneur, then the propensity of that wealth compounding is significantly higher.
Right. So real quick, 10 lakh rupees, how much in mutual funds and ETFs, how much in gold, how much in real estate, and how much in global?
85% is in mutual funds to SIP, which is plain, simple, boring, compounding stories
Yeah.
with me. And in that 15%, it includes the house that I own, and tail end 5% is between gold and the private equity portfolio that I have.
Okay, great. Well, thank you so much. I think this has been a wonderful conversation, very insightful. I've learned a few things from you guys, and hopefully, I was able to impart some knowledge on digital assets as well. This is always fun for me. We don't quite have a hamper to be won, but we do have our plush drop for you guys. So thank you so much. That's from our brand Plush Plaza. It's for the upwardly mobile like yourselves and for the rest of the people watching. And it's our line of travel and lifestyle accessories. So thank you so much and hope to catch you again soon.
Perfect. Thank you.
Yeah.